It's a cloudy Tuesday here in Seoul. Hello and welcome to Business Daily. I'm Ji-yoon. Let's get started with a glimpse of today's highlights. Korean firms' business outlook for December has worsened, with manufacturers expecting gloomier economic conditions in the near term. Is Korea's economy on a solid recovery path, and will it reach its growth target of 3% this year on the back of strong exports? We'll sit down with an expert to talk about this. Korea's business sentiment ticked up in November on the back of rising exports and thawing relations between Korea and China. But the outlook for December appears relatively dim, according to the Bank of Korea and the Korea Economic Research Institute. Our Kim Hae-sung starts us off.
Korea's overall business sentiment hit 80 in November, inching up from the previous month. According to the Bank of Korea Tuesday, the Manufacturing Business Survey Index went up 2 points thanks to strong exports. In particular, the BSI for the automobile sector jumped 6 points, hitting 76 on expectations of stronger sales in China. Non-manufacturing BSI also went up by 3 points on longer business days for November compared to October, with the nation's extra-long Chuseok harvest holiday and a thaw in South Korea-China relations. But the central bank said the manufacturing BSI outlook for December edged down 2 points due to growing concerns over the strengthening Korean won. Another business survey on Korea's top 600 companies conducted by the Korea Economic Research Institute also showed a gloomy business outlook. The think tank said its business survey index for December marked 96.5. It's the first time since the Asian financial crisis that the index has remained below 100 throughout the entire year. The average BSI for this year came to 93.5, the lowest since the global financial crisis in 2008. The think tank said business sentiment has been eroded by structural problems like household debt and external uncertainties, including trade disputes with the U.S., a possible U.S. rate hike, and the North Korea threat. Kim Hae-sung, Business Daily.
The income of single-person households here in Korea logged its biggest decrease in nearly 4 years during the third quarter. Statistics Korea says the average monthly income of those living alone was less than $1,500, a 3.5% drop from a year earlier. It's the biggest fall since the fourth quarter of 2013. Now, the decline is being attributed to the rapid growth of elderly people living alone, with 17% of all single-person households now being comprised of senior citizens. There are also concerns that the country's high youth unemployment rate is also applying downward pressure on the income level of those living alone. China has announced a partial lifting of a ban on the sale of group tour packages to Korea. China's National Tourism Administration decided on Tuesday to allow travel agencies in Beijing and Shandong province to sell tour packages to Korea. With the move, group tours may finally resume for the first time since March, following a ban that was implemented in protest of Seoul's deployment of a THAAD missile defense system. While sales are resuming, Chinese travel agencies revealed that Beijing is not allowing the inclusion of Lotte hotel accommodations or Lotte duty-free shopping in their packages. According to a source cited by the local Yonhap news agency, China's easing of the ban could be incremental, being lifted one region at a time. Relations between Korea and China have seemingly turned a corner, and a free trade deal could also be in the works ahead of a bilateral summit meeting in Beijing next month. So are the two sides about to bury the hatchet amid the easing of tensions over Seoul's deployment of a THAAD missile defense system? Our Park Hee-jun has more.
South Korea and China are expected to start a new round of negotiations on their bilateral trade deal during President Moon Jae-in's state visit to China next month, according to a South Korean high-level diplomatic source on Monday. Seoul and Beijing signed a free trade agreement on December 20, 2015, mainly focused on tariff barrier elimination for commodities. The two sides had agreed to negotiate terms for the service and investment sectors within 2 years since the implementation of the deal, but talks have been stalled due to China's unofficial economic retaliation against South Korea over the deployment of THAAD on the Korean peninsula. The upcoming round of negotiations is mainly expected to concern restrictions on South Korean companies operating in China and vice versa, which would prove beneficial for South Korea's entertainment, tourism, IT, communications, and finance sectors. With the recent extension of the two countries' currency swap agreements and steady resumption of diplomatic exchanges, the planned FTA talks could signify a stepping stone towards improved and strengthened economic ties between Seoul and Beijing. Park Hee-jun, Business Daily.
Korea has seen a surge in agricultural imports from the European Union over a recent one-year period. According to a European Commission report on Tuesday, the EU exported $3.6 billion worth of agricultural products to Korea from last October to September of this year. That is up more than 26% compared to a year earlier, the biggest rate of increase out of the EU's top 20 export partners. Korea pulled ahead of Algeria as the EU's 13th largest market on the back of an upgraded free trade deal and higher import demand following a bird flu outbreak. According to market watchers, economic conditions may be ripe for Korea's first interest rate hike in 6 years. But a strong local currency is seen as the biggest variable on whether or not the BOK will decide to pull the trigger. Our Lee Joo-young has this report.
In just 2 days, the Bank of Korea will convene for its November policy meeting. The market consensus is that a rate hike will take place from the current 1.25% to 1.5%. It will be the first increase in borrowing costs since 2011, ending a 5-year easing cycle. The central bank has already given off hints of tightening on several occasions on the back of encouraging economic data. That includes Q3 GDP, which grew at the fastest clip in 7 years, largely due to strong global demand for memory chips. The country's ever-growing household debt pile, already over the 1.4 trillion won threshold, is also a contributing factor.
The rate hike is likely to help slow the growth of Korea's household debt. I think it can also alleviate concerns of foreign capital outflow as the US continues to raise its key rates.
On the flip side, though, the average debt per household of roughly $64,000 may cause domestic demand to shrink. Experts also add that a rate hike can further strengthen the already firm won, hurting exports.
If Korea were to raise its key rate, foreigners will perceive our economic fundamentals to be improving. This can accelerate the appreciation of the won.
While policymakers point to tightening monetary policies this time around, a consecutive rise is seen as highly unlikely. Lee Joo-young, Business Daily.
Korea's secondary KOSDAQ index fell sharply today as profit-taking took its toll following an extended rally. Although overall sentiments remain upbeat, today's losses are reinforcing worries that a bubble may be forming in the tech-heavy bourse. Our Shin Se-min reports.
Korea's junior tech-heavy KOSDAQ market is on a record-breaking run. The country's small-cap-focused KOSDAQ index closed the day 2.5% lower on Tuesday, seeming to slow a bit, but the overall sentiment not waned. As of market close last Friday, the index logged a monthly gain of 14%, while its bigger cousin, benchmark Kospi, was trading in negative territory. The junior bourse had even pierced through the 800 mark for the first time in history at its intraday high on Friday and is still eyeing to close above that threshold. And the main driver of the rally is brewing anticipation ahead of the fresh government measures to support SMEs set to be unveiled next month.
The government's promise to support small and mid-sized firms, as well as its promise to overhaul KOSDAQ's listing rules, are stimulating the country's junior market.
On top of that, the Financial Services Commission has hinted at potential tax breaks to long-term investors in the KOSDAQ, further amplifying positive sentiments. And apart from the government's push and pull, there's also the boom in pharmaceutical and biotech firms and their upswinging market value.
The recent rally can be credited to the government's strong support for the sector, but some are concerned about excessive valuations, especially for biopharmaceutical counters.
Though the recent KOSDAQ rally is stoking fears of a bubble and profit-taking, there's still plenty of room to grow, even without the popular pharma and biochem sectors. Recovery in the global and local economies is steadily picking up pace, and the upcoming Pyeongchang Winter Games and warming ties with China could open the doors even further for KOSDAQ-listed companies. With firms embracing the coming fourth industrial revolution, the KOSDAQ is poised to grow even further, eventually cementing its position as the world's third largest secondary bourse. Shin Se-min, Business Daily.
The government expects Korea to achieve this year's growth target of 3%, which is in line with forecasts by the Bank of Korea and the IMF. So is the Korean economy ready to emerge out of its low growth cycle next year? Let's take a closer look.
In the July to September period, Korea's GDP posted a solid growth of 1.4% from the previous quarter, a sign that perhaps the local economy is on track to meet or even surpass its growth target of 3% this year. This comes amid a general recovery in the global economy, as well as strong Korean exports in the past couple of quarters. On top of this, the Korean won has been strengthening, and eyes are on whether the country will be able to achieve the $30,000 per capita income milestone. There have been concerns that a stronger local currency could erode Korea's export competitiveness. However, experts say a firmer won indicates a robust economy and that it is likely to maintain its growth momentum next year.
And to tell us more about this, Professor Joon-seok from the Catholic University of Korea joins us in the studio today. Great to have you here.
Happy to be here.
All right, so the government and the IMF expects the Korean economy to grow 3% next year. But foreign investment banks such as Nomura were far less optimistic, saying that the Korean economy would grow about 2.3% next year. So what are your thoughts on growth for next year?
Okay, well, all of these projections are usually based on their models, just equations. And a lot of times, what the models are calibrated on are past data. So in the past, you've seen estimation which were growth rates which were too high and then continue to fall throughout the year because they've used it as past data where things were perhaps a bit too optimistic. I think what we've seen since the global financial crisis is that data calibrated to the past, especially past before the global financial crisis, doesn't work very well anymore. So I think there's a lot of variance on what kind of estimations that the investment banks or international organizations are giving us. We cannot completely trust the numbers, but that's always been true for any kind of projections and estimations. Given the global recovery so far, I don't see anything that's particularly going to be different next year than this year. My bet would be closer to the government and the IMF side.
Now, if Korea is able to maintain this 3% growth, then will it help to get the Korean economy out of its low growth cycle? And also, what kind of other effects will it have? Okay,
well, low growth cycle, that has different meanings for different people. For example, for I think older Koreans, we still remember the days when we had 7, 8, 9% growth rate. So anything below 5% would be considered very low. Whereas the younger people, they've never really seen a GDP growth rate go beyond 4%. So they may think that this 3% growth would be on the high side. But I think what's most alarming, though, is that a lot of calculations show that because Korea's investment has fallen in the last few years because of the age demographics, the potential growth rate for the Korean economy is now at 3% level, which means if we hit a high 3% growth rate this year, we may actually be overheating the economy. So what do we have to do? Well, if we really want to get out of this low growth path, and I mean something that's below 4%, then we need to increase investment, but even more importantly, we need to increase productivity of the economy. And I'm afraid we haven't been working too much for that.
Now, the focus is also on Korea's exports, which the outbound shipments have been seeing growth for the past couple of quarters. So I'm sure this this is a good sign.
Well, exports has really rescued Korean economy. If you look at the third quarter GDP report, the biggest contributor was exports, and the second biggest contributor was government spending. Now, the bit of a problem with this is that previously, if you had good export sector, then that's bled over to the domestic sector. So you get a growth engine from exports, which started the engine for the domestic economy, domestic consumption as well. That does not seem to be working this time around. Okay. We don't know whether that's because it's taking longer than usual because it's been such a long slowdown, or whether something drastic structurally has changed. So we'll have to wait and see which one of those hypotheses is true. But I think higher exports is definitely helping us. And some people are worried that this is only semiconductors, but if you look at the exports across the board, most of them are increasing. Even though it may not spark domestic consumption as it used to, having higher exports does really help.
But then the recent appreciation of the won has been worrying local exporters that it might hurt export competitiveness. So how worried should we be?
Okay, well, so far it's been falling only for about 2 weeks. I think it's a mistake to worry too much about possible short-term fluctuations with long-term fluctuations. But even then, even if this does turn out to be a bit of a more longer term, well, we had similar levels of low rates during 2013, 2014, and we actually had higher exports then.
Okay.
Again, after the global financial crisis, Korean exports seem to be less correlated with exchange rate than it used to be. And we had relatively weak won rates last year and the year before, but the exports fell. So I think much more important is whether the global economy recovers. I think that plays a much more part in Korean recovery of exports than the exchange rates.
And of course, we kind of have to look at the rising global oil prices. I mean, how important of a variable do you think this is to growth, I guess?
Okay, I think unlike, say, the early 2010s when the price per barrel went up to more than $100, I think the price rise is limited this time. And the reason is that there's fracking now. If the price rises above, say, about $80, then you will have fracking supply coming in. And a lot of these governments are now desperate for cash. So I'm not sure if they will be willing to reduce their production to raise prices even more than the current expected level of $60 per barrel. So I think compared to the past, we will see a rise in oil prices, but perhaps not as much as what we're used to, say, about 8, 9, 10 years ago. And if the stronger won continues, then that will also mitigate a lot of this effect from higher dollar prices.
Okay. Well, thank you so much for your insight today.
Thank you.
President Moon Jae-in chaired his government's very first innovative growth strategy meeting this afternoon. The meeting was attended by around 120 people, including the president's top aides, cabinet officials, and political leaders. Moon stressed the need to reform Korea's regulatory landscape on new businesses and startups to foster innovation in the private sector. President Moon has trumpeted innovative growth as one of his 4 pillars of his people-centered economic policy. In his second State of the Nation address earlier this month, Moon reaffirmed his vision of income-led growth alongside job creation and a fair economy. The Korean government is taking another big step forward to clean up the nation's skies. Under a new regulation approved on Tuesday, newly built or imported diesel trains will be subject to much stricter emission standards starting from 2019. It is hoped the move will help to reduce the country's dangerously high levels of the fine dust air pollution. Here's our Ji Myung-gil with more.
The Korean government passed a revision to the Clean Air Conservation Act during Tuesday's cabinet meeting, aimed at regulating emissions from diesel railway engines.
The government should act now by securing extra budgetary funds, if needed, or take additional measures.
Under the new law to help tackle fine dust from 2019, all newly built or imported diesel-run railway locomotives will be subject to emission controls. The specific emission standards and authorization procedures will be stipulated under a subcategory of the amended law. The United States and European Union already regulate emission standards for diesel trains. Joint research by Korea, Japan, and China led by Seoul National University shows that if a person is exposed to fine dust for nearly 7 days in Korea, the mortality risk will increase by up to 3.4%. The study showed that if a person is exposed to 2 days of fine dust pollution, the mortality risk will increase 0.5 percentage point. Fine dust has been known to cause various respiratory diseases and undermine the body's immune system. The Seoul government has been making efforts to step up regional cooperation with neighboring countries to fight air pollution and to improve air quality. 지명길, Business Daily.
The government's plan to revise an anti-graft law is now in limbo, as Korea's anti-corruption body rejected a proposal for changes in the regulation. A revision was deemed necessary to limits on gifts and free meals that people working in certain sectors can accept under the law. Eunice Kim explains further.
Efforts to revise an anti-graft law have come to a halt after Korea's Anti-Corruption and Civil Rights Commission voted against a revision to the so-called Kim Young-lan Act. At a closed-door session on Monday, the commission voted to turn down a proposal to revise the law after nearly 3 hours of intense discussion. Prior to the meeting, the commission was anticipated to double the current price limit on agricultural and fishery gifts from 50,000 won to 100,000 won, or roughly $92. They were also expected to deliberate on the inclusion of processed foods containing agricultural and marine products as gifts and lay out their final proposal to the public on November 29. In its current form, the regulation bans educators, journalists, and civil servants from receiving gifts over specified price limits, according to what's been dubbed the 30-50-100 rule. These include free meals worth over 30,000 won, or $28, gifts worth more than 50,000 won, or $46, and condolence or congratulatory money over 100,000 won. Offenders face a penalty of up to 30 million won, roughly $27,000, or a 3-year prison sentence. Eunice Kim, Business Daily.
Starting next year, a tax exemption for religious leaders will be lifted, requiring the likes of Christian pastors, Catholic priests, and Buddhist monks to pay income taxes for the first time. The waiver had been in place since 1948, when South Korea was formally established, though some have opted to voluntarily file and pay taxes. The bill prepared by the Ministry of Strategy and Finance, levying income taxes on clergy, would come into effect starting in January. However, it includes a section on exemptions for religious activity to be determined by the religious groups and organizations themselves. And that brings us to the end. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.